Welcome to The Explainer. Today, we're jumping headfirst into the high-stakes world of Forex trading. It's the single largest financial market on Earth, and things can get pretty wild. You know, we hear all the time about these huge wins and massive losses in the stock market. It's pretty standard stuff. But what if the stakes were bigger? I mean, what if you could place a bet that was so huge it could challenge an entire nation's economy? Well, in this explainer, we're going to break down 3 legendary financial heists where traders did exactly that. They took on countries and they won. So let's start by looking at the playbook they used. Okay, so first things first. We got to understand the tools of the trade. How on earth do you even bet that a country's currency is going to fall? Well, their number one weapon is something called shorting. And really, it's just a fancy, structured way of saying you're making a bet that something's price is going to go down. Imagine it like this. You borrow a currency, let's say 100 kiwi dollars. Then you wait for its value to drop. And once it does, you pay back that loan with the now cheaper currency, and you get to keep the difference. Simple, right? But what's really powerful is how these traders amplified this basic idea. The secret ingredient is leverage. Think of it like using the bank's money to make a way bigger bet than you could on your own. This just magnifies your potential profits, enormously. So let's move to our first case file and see exactly how this plays out in the real world. All right, so our first mastermind is a guy named Andy Krieger. He's this 32-year-old trader back in 1987, and he's working right in the chaos after the infamous Black Monday market crash. So after that huge crash, you had all this money just flooding out of the US dollar. Investors were scared, so they started piling into smaller currencies. And that made those currencies artificially strong. And that's where Krieger spots his opportunity, in the New Zealand dollar, also known as the kiwi. Now get this, using some really advanced options, Krieger places this massive short bet against the kiwi. We're talking so much selling pressure that he basically overwhelmed the entire country's ability to defend its own currency. The result? The kiwi's value dropped by a sharp 5%, earning millions for his employer. The trade was so aggressive, the story goes that New Zealand officials actually called his bosses to try and make him stop. Okay, next up we have Stanley Druckenmiller. This guy was a real strategic genius working for the legendary George Soros. And what's amazing is that he made 2 brilliant but very different bets on the exact same currency, the German mark. His first big move came right when the Berlin Wall fell. Now, everyone else was panicking, right? Fretting about how much reunification was going to cost. But Druckenmiller, he saw a currency that was beaten down and totally ready to rally. And at Soros's urging, he went all in. But his second bet was even more clever. He saw the entire chessboard during the UK's currency crisis. And this move just perfectly shows you how interconnected all these global markets really are. And that, of course, brings us to the main event, to the biggest whale of them all. George Soros, the man they say broke the Bank of England. Okay, so back in the early 90s, Britain was in a tough spot. They had basically handcuffed their pound to the much stronger German mark. This whole arrangement was causing sky-high inflation and crazy interest rates. Soros looked at this and thought, that's a dam that's about to break. And the British government, they fought back hard. They were trying desperately to defend the pound, even jacking up interest rates to these punishing levels. But Soros and the other speculators, they just kept applying pressure, betting that the government couldn't afford to keep this fight up forever. And they were right. The UK finally realized it was going to lose billions in a fight it couldn't win. And they surrendered. They pulled out of the system, and the pound's value just plummeted. And Soros? His profit from that one single trade was at least $1 billion. But that raises a really crucial question. What happens to the country that's on the other side of a bet like that? Look, these trades made absolute fortunes, but that money came from somewhere. It came at a huge cost to national treasuries. So you have to ask, were these guys just villains, crippling whole economies for their own personal gain? Well, you'd be surprised. The outcome isn't nearly as black and white as you might think. Yes, the British government lost a ton of money, but the crazy part is that forced devaluation actually helped the UK economy recover in the long run. It made the whole environment much better for businesses. And that really gets to the heart of this whole debate. The thing is, traders like Soros didn't create the economic weakness, they just exposed it. And they profited from the correction that was probably going to happen anyway.
So that leaves us with this central question, doesn't it? Are these speculators just a necessary force of nature in the market, holding economies accountable? Or are they just predators, roaming a global casino and exploiting weakness wherever they find it? That right there, that's the billion-dollar question.